James, we're moving in a new strategic direction. Your services are no longer required. The words hung in the sterile air of Conference Room 3B, smelling faintly of lemon-scented cleaner and corporate finality. Richard Sterling, CEO of Sterling Materials and son of its founder, delivered the line with the rehearsed sincerity of an MBA who had practiced it in front of a mirror. He was 44 years old, with a jawline that had never known a hard day's work and a Brioni suit that cost more than my first car. My name is James Thornton. I'm 50 years old. For 22 of those years, I was the controller at Sterling Materials. I built their financial systems from a shoebox of receipts into a fully integrated enterprise resource planning system that tracked every single bolt, invoice, and hour of overtime across 3 states. I didn't flinch. I didn't raise my voice. I just looked at him, then at the nervous human resources vice president sitting beside him, a woman named Carol who had been with the company for less than 2 years. My gaze was steady. My hands rested calmly on the polished mahogany table. Inside, a switch flipped, not to anger, not to panic, but to a state of dead calm. It was the calm of a navigator who sees the iceberg and already knows the precise angle of the turn required to miss it. Richard continued, mistaking my silence for shock. It's a simple restructuring, James. We're streamlining. We need a more agile financial outlook, someone who can interface with our new venture capital partners on their level. It's not personal. It was always personal. I knew the real reason. It wasn't about agility or venture capital. It was about the questions I'd started asking 6 months ago. Quiet questions, posed in budget review meetings. Questions about a set of vendors that seemed to have no physical address. Vendors with names like Elysian Event Services and Gilded Interiors LLC, who were billing us for 7-figure sums for corporate consulting and brand enhancement. Questions Richard had deflected with a tight smile and a dismissive wave. He had no idea that I'd already found the answers. He had no idea that for the past 3 years, I hadn't just been doing my job. I'd been building a case. What Richard Sterling, with his Wharton degree and inherited title, failed to understand was that a good controller doesn't just count the beans. He knows where every single bean came from, where it's supposed to go, and what it smells like when it starts to rot. What he didn't know was that my questions weren't for him. They were for my own records. The answers were already compiled, cross-referenced, and stored on 3 identical military-grade encrypted SanDisk thumb drives. One was in a safe deposit box at a bank 2 towns over. One was with my lawyer. The third was in the false bottom of a can of WD-40 in my garage. If you appreciate stories about quiet competence dismantling loud arrogance, about corporate karma being delivered, not with a bang, but with the quiet click of a send button, hit that like button and subscribe to the channel. You're in the right place, because every story here is about the underestimated finally holding the receipt. My history with Sterling Materials started long before Richard. I was hired by his father, Robert Sterling, back in 1999. The company was a regional supplier of construction aggregates, with 30 employees and an accounting system that ran on Lotus 123. Robert was a tough, fair man who had built the company with his own hands. He understood the value of a dollar because he'd had to fight for every one of them. He once told me, "James, a business is like a body. The numbers are its blood. If you don't know what the pressure is, you're already dead." I took that to heart. For 22 years, I was the company's circulatory system. I managed cash flow through the 2008 financial crisis, finding efficiencies that kept us from laying off a single driver while our competitors folded. I oversaw the financial integration when we acquired a smaller rival in 2014, a process so seamless that we were profitable within 2 quarters. I negotiated with unions, audited pension funds, and filed tax returns, so clean the IRS probably framed them. My life was a series of spreadsheets, general ledgers, and quarterly reports. I missed my daughter Sarah's third-grade play because we were closing the books on a fiscal year. I spent our 15th wedding anniversary on a conference call finalizing a line of credit. I didn't complain. It was the job. I was building something. I was providing for my family. My value wasn't in a title. It was in the institutional knowledge I carried in my head. I knew why the depreciation schedule on the B-Series rock crushers was set at 7 years instead of 10. I knew which customers were slow to pay in the winter months and how to budget for it. I was the one who got the call at 3 a.m. when a fuel depot's payment system went down, and I was the one who could walk the night manager through the manual override procedure from memory. I was the foundation, and like all foundations, I was invisible until something went terribly wrong. Richard took over as CEO in 2018 after his father passed away. He arrived with a fresh MBA, a Tesla Model S, and a vocabulary full of words like synergy, optimization, and disruption. He saw the company not as a legacy to be stewarded, but as a cash machine to fund his and his wife's lifestyle. His wife, Isabella Sterling. She was his second wife, a former art gallery curator 20 years his junior, who carried herself with the bored entitlement of old money she hadn't earned. She chaired charity galas, sat on museum boards, and had an Instagram feed filled with photos of herself in Monaco, Aspen, and on the deck of a yacht in the Caribbean. She was the one who loved to talk about brand enhancement. The secret weapon wasn't a secret at all. It was just my job, performed with the meticulous discipline Robert Sterling had instilled in me. It started 3 years ago, in February 2020. An invoice crossed my desk from a vendor I didn't recognize, Elysian Event Services. The amount was $85,000 for logistical support and staging for our annual shareholder meeting. This was odd. We'd used the same local company, AV Solutions, for a decade, and their bill was never more than $20,000. I looked up Elysian. No website, no phone number, just a P.O. box in a neighboring state. The invoice was approved with Richard's signature. I filed it away, but made a note, a small red flag in the back of my mind. A few months later, another one. Gilded Interiors LLC, an invoice for $150,000 for office rebranding consultation. Our offices hadn't been rebranded. They were the same drab beige they'd been for years. This invoice was also approved by Richard. This time, I did more than make a note. I ran a search on the LLC. It was registered to a holding company with a generic name. The registered agent was a law firm known for creating anonymous shell corporations. The red flag was now flapping in a steady breeze. My stakes were simple. My entire 401k was tied up in Sterling Materials stock. My pension was managed by the company. My house, nearly paid off after 2 decades, was secured by my salary of $220,000 a year. My daughter, Sarah, was a sophomore at Texas A&M, and her tuition was due in August. I wasn't just an employee. My entire financial life, my family's security, was built on the bedrock of this company, and I could feel a tremor in the foundation. My own father, a mechanic who worked on diesel engines for 40 years, gave me one piece of advice that stuck. A man who doesn't check his own oil is a fool waiting for his engine to seize. That's what I began to do. I started my own audit, on my own time, on a separate, air-gapped laptop I bought with cash from Best Buy. I wasn't a spy. I was an accountant. My tools weren't listening devices. They were public records databases, archival invoice software, and a deep understanding of how money is supposed to flow. I started cross-referencing the invoice dates from Elysian Event Services with Isabella's social media. An $85,000 invoice for shareholder meeting logistics, dated May 12th, corresponded perfectly with an Instagram post from Isabella on May 14th, showing off a new Patek Philippe watch, a model that retailed for around $80,000. A coincidence? Maybe. Then came a $250,000 invoice from a new vendor, Viridian Strategic Consulting for market analysis. The payment was processed on September 3rd. On September 5th, Isabella posted a photo of a new Range Rover autobiography with a giant red bow on it. A surprise from her loving husband. The pattern was becoming undeniable. The arrogance of it was breathtaking. Richard and Isabella weren't even trying to be clever. They believed they were untouchable. They thought the controller was just an old relic, a piece of infrastructure from his father's era who just pushed papers and signed checks. They never imagined he would read the papers before he pushed them. They celebrated their theft openly, hosting lavish parties at their mansion, paid for by corporate entertainment expenses that I now scrutinized under a microscope. Richard would give speeches about fiscal responsibility and lean operations, while his wife was wearing a diamond necklace that cost more than my annual salary. My evidence compilation was methodical. It became a ritual. Every night, after my wife and daughter were asleep, I'd go to my study, power up the clean laptop, and work for 2 hours. I created a timeline, linking every suspicious invoice to a corresponding luxury purchase or cash transfer. I used corporate credit card statements, which, as controller, I had full access to document personal expenses being billed to the company. A $12,000 charge at a Versace boutique in Milan, coded as client relations. A $30,000 weekend at a 5-star resort in Napa, coded as executive offsite. I pulled the incorporation documents for each fake vendor. Elysian Event Services was registered to Isabella's former college roommate. Gilded Interiors LLC was registered to her brother. Viridian Strategic Consulting traced back to a disgraced lawyer who had been a groomsman at her and Richard's wedding. It was a closed loop of fraud, and they were all in on it. The final piece of the puzzle clicked into place when I found the bank. All 3 shell companies, despite their different names and addresses, funneled their payments into a single business account at a small, private bank in Delaware. An account under the name IS Holdings, Isabella Sterling. I built a fortress of data. Flowcharts showed the movement of money from Sterling Materials to the shell companies to Isabella's holding company. A spreadsheet cataloged over 200 separate fraudulent transactions. I had copies of the original invoices, the canceled checks, the bank transfer confirmations. I had screenshots of the social media posts. I had a detailed report outlining how Richard had bypassed standard procurement protocols using his CEO override authority, a function I myself had designed into the system with a clear audit trail. He had used the very system I built to rob the company, and the system recorded his every move. The total, as of my last day, was $67.4 million. $67,428,551.12. Stolen over a period of 3.5 years. When Richard fired me, he thought he was cutting out a minor annoyance. He thought he was solving his problem. In reality, he was unlocking the cage and handing me the keys to his destruction. I didn't act immediately. A wounded animal is unpredictable. A comfortable, arrogant animal walks right into the trap. I took the severance package they offered, 6 months' pay, contingent on signing, a non-disclosure agreement. I took the document to my lawyer, a sharp woman named Helen, who had handled my father's estate. We read it together. I pointed out that the NDA had a standard clause invalidating it in cases of criminal activity. She just smiled. I signed it. Let them think I was silenced. For 2 months, I did nothing. I fixed the leaky faucet in the guest bathroom. I helped Sarah study for her organic chemistry final. I enjoyed dinner with my wife every single night. And I watched. I watched the company's stock price dip slightly. I read the quarterly report, which was now filled with the kind of optimistic jargon only a liar could write. Richard was getting comfortable. He had his new, agile controller, a 32-year-old kid from a big accounting firm who wouldn't know a fraudulent invoice if it was printed on bright red paper. The trap was set for the quarterly board of directors meeting, scheduled for October 12th. This was the stage. It was a formal, documented event, the perfect venue for a controlled detonation. The day before, I finalized my preparations. I prepared 3 identical packages. Each contained a hard copy of my 80-page summary report, complete with exhibits, and one of the encrypted thumb drives containing the entire digital fortress of evidence. One package was for Marcus Thorne, the lead independent director on Sterling's board, a man I knew to be a stickler for rules and fiduciary duty. The second was for the Enforcement Division of the Securities and Exchange Commission. The third was for a consortium of 2 major institutional shareholders who collectively owned 35% of the company's stock. I hired a bonded courier service, the kind used for legal documents and sensitive materials. The instructions were precise. All 3 packages were to be delivered simultaneously on October 12th at exactly 10:15 a.m. Eastern Standard Time. I also drafted 3 emails, one to each recipient, with the subject line, Urgent, Fiduciary Duty and Material Financial Irregularities at Sterling Materials. The emails contained a brief, professional summary and a secure link to a cloud server where I had uploaded a 4th copy of the entire evidence package. The emails were scheduled to be sent at precisely 10:15 a.m. Redundancy is key. On the morning of October 12th, I sat in my study with a cup of coffee. I imagined the scene. The opulent boardroom on the 40th floor of the Sterling Tower. The long, polished table. The 8 board members, mostly old friends of Richard's father, who had grown complacent. And Richard at the head of the table, at the peak of his confidence. He would be in the middle of a presentation, showing slides with manipulated revenue projections, and talking about the successful cultural shift within the company. He probably had a slide that mentioned my retirement as part of that positive change. At 10:14 a.m., my heart rate was a steady 65 beats per minute. I was not nervous. I was a controller executing a final, critical transaction. The numbers were checked, the paperwork was filed, and the process was sound. At 10:15 a.m., my laptop chimed softly, confirming the emails had been sent. 3 couriers in 3 different cities were handing over their packages. In that single, coordinated moment, the truth arrived. I didn't get to see it happen, but Helen, my lawyer, pieced it together for me later from witness accounts during the depositions. At first, it was just the subtle vibration of phones on the boardroom table. Board members glanced down, eyebrows raised, then a quiet knock at the door. An assistant entered and handed a thick manila envelope to Marcus Thorne. Richard, mid-sentence about synergizing future growth, faltered. He watched as Marcus opened the package. Marcus didn't say a word. He simply began to read the executive summary. His face, normally placid, hardened into a mask of cold fury. He slid the report to the director next to him. A quiet, horrified murmur spread around the table as the document was passed from hand to hand. Richard tried to regain control. Marcus, is there something we need to address? Marcus Thorne looked up, his eyes boring into Richard. He held up his phone, displaying my email. I think, Richard, he said, his voice dangerously low, you have some explaining to do about Elysian Event Services. That's when the power shifted. The color drained from Richard's face. He knew the names. He knew what they meant. He stammered, That's a routine vendor payment. It's all been approved. By you, Marcus shot back. An override of standard protocol. And according to this document, which has also been delivered to the SEC, that routine vendor is a shell corporation owned by your wife's brother. The room fell into a tomb-like silence. The enablers, the board members who had cashed their dividend checks and never asked hard questions, now stared at Richard as if he were a stranger. Their self-preservation instincts kicked in instantly. They were no longer his allies. They were his judges. My email had done its work. It was a simple, factual statement of events. It concluded, as a former officer of the company with a fiduciary responsibility to its shareholders, I am obligated to report these findings. The complete evidentiary package, including bank records, invoices, and a detailed transaction log, is attached for your immediate review. I have taken the liberty of forwarding this information to the relevant regulatory authorities and major shareholders to ensure full transparency. The meeting was over. The board immediately went into executive session, from which Richard was excluded. Security was called. By noon, Richard Sterling was suspended indefinitely, pending an internal investigation. He was escorted from the building he considered his birthright, carrying his belongings in a cardboard box. The aftermath was swift and brutal, a perfect cascade of consequences. The board, led by Marcus, hired an outside forensic accounting firm, one of the Big Four, to verify my findings. It took them 3 weeks and cost the company $1.2 million to produce a report that was essentially a more expensive version of the one I had provided for free. The SEC froze Richard and Isabella's assets, all of them. The mansion in Greenwich, the condo in Aspen, the fleet of luxury cars, the private bank accounts, everything. The wheels of justice, once they started turning, moved with terrifying speed. Richard was fired for cause. No golden parachute. No severance. His employment contract, which I had on file, had a clawback provision for acts of gross misconduct. The board invoked it. They sued him to recover not only the $67.4 million he had stolen, but also the salary and bonuses he had been paid during the period of the fraud. Isabella was arrested 2 days later at a spa. The press had a field day. Photos of her being led away in handcuffs, wearing a $2,000 tracksuit, were on the front page of the Wall Street Journal. She and her brother and her college roommate were all charged with conspiracy, wire fraud, and money laundering. The poetic justice was exquisite. Their lavish lifestyle, so proudly displayed on social media, became Exhibit A for the prosecution. The vacation photos, the new cars, the designer clothes, all of it was used to establish motive and demonstrate the fruits of their crime. The arrogance that made them believe they were untouchable was the very thing that ensured their conviction. Richard got 8 years in a federal minimum security prison. Isabella, as the architect of the scheme, received a sentence of 12 years. Her brother got 4. The other board members, the enablers who had looked the other way, were forced to resign in disgrace. The company paid a hefty fine to the SEC for its lack of internal controls, but was spared worse, thanks to its full cooperation after the fact. And me? My life was restored. The first thing I did was take my wife on a long overdue vacation to Hawaii. No laptops, no conference calls. For the first time in 2 decades, I was completely present. I attended every one of Sarah's college softball games her senior year. I was there, in the front row, when she graduated with honors. The new board at Sterling Materials offered me the interim CEO position. They offered me a massive pay raise and a corner office. I politely declined. I had no desire to clean up Richard's mess. My work there was done. Instead, I started my own consulting firm, Thornton Forensic Accounting. My first client was the consortium of shareholders from Sterling, who hired me to help oversee the asset recovery process. My reputation in the industry was solidified overnight. I was the man who had brought down a corrupt CEO with nothing more than a spreadsheet and a refusal to look the other way. My little firm now has a waiting list of clients. There was one final, satisfying detail. Under the Dodd-Frank Act, whistleblowers are entitled to a percentage of the funds recovered by the government. 6 months later, a check arrived from the U.S. Treasury Department. It was my reward for the information I had provided. It was for 18% of the recovered $67.4 million. After taxes, it was enough to ensure that my family and their children would never have to worry about money again. I still live in the same house. I still drive my 2005 Ford F-150. Some things are built to last. The foundation is sound. Arrogance makes people believe They are the main characters in everyone's story. They forget that the quiet people in the background are also watching, listening, and taking notes. Richard Sterling thought he was the master of his universe, but he forgot to check the ledger. And in the end, the numbers don't lie. Thanks for watching. If you haven't already, make sure to subscribe and hit the notification bell so you don't miss the next story of justice, served cold and with documentation. Leave a comment below and let me know what you think. I'll see you in the next video.